Welcome back to Accounting 102. We're going to be covering today Chapter 4, Activity-Based Costing. The learning objectives are to discuss the difference between traditional costing and activity-based costing, apply activity-based costing to a manufacturer, explain the benefits and limitations of activity-based costing, and then apply activity-based costing to service industries. So let's talk about the differences. Traditional costing allocates overhead using a predetermined rate. We talked about two different methods: a job order costing, direct labor, maybe the relevant activity base that we use there, a process costing system, and we talked about using machine hours there. So whatever the predetermined rate is based on the activity base, you multiply that rate times that activity base and assign it to the products. So if we have Atlas Company producing two abdominal fitness products, Ab Bench and the Ab Coaster, direct materials per unit is $40 for the bench, $30 for the coaster. Direct labor is $12 per unit for each product. Both products require one direct labor hour per unit and are allocated overhead costs of $30 per unit. So the direct labor and overhead are the same for both, and here you can see at the bottom the only difference, $10 difference, is because of the direct materials. Ab Bench is costing $82 per unit, $72 for the Ab Coaster. But we need a new approach. So change in manufacturing and service industries. We are decreasing the amount of direct labor usage through automation. We have significant increase in total overhead costs. So the cost to run the machines, potentially depreciation. It's inappropriate to use factory-wide predetermined overhead rates when a lack of correlation exists. So what that is saying is that if there's not a direct correlation between the base that you're using and what's actually driving costs in the business, then you shouldn't be using that factory-wide predetermined rate. And then complex manufacturing processes may require multiple allocation bases. And that's where we get into activity-based costing, or ABC. So activity-based costing is an approach for allocating overhead costs. It allocates overhead to multiple activity cost pools. So instead of just looking at the total overhead, we're going to break it down into different cost pools. Then we're going to assign the activity cost pools to products or services by means of cost drivers. So similar to what we saw with the predetermined overhead rate on a factory-wide basis, we're going to have a cost driver for each cost pool, get a rate, and then apply the cost of the products using that rate and that activity base. So some key concepts here: activity is any event, action, transaction, or work sequence that incurs cost when producing a product or performing a service. The activity cost pool is the overhead costs attributed to a distinct activity. So the example of ordering materials or setting up machines, we can grab the overhead cost for that distinct activity. And then cost driver is any factor or activity that has a direct cause-effect relationship with the resources consumed. 4 steps that we're going to take. We're going to identify and classify the activities involved in the manufacture of specific products and allocate overhead to those cost pools. We're going to identify the cost driver that has a strong correlation to the costs. We're going to compute the activity-based overhead rate for each cost pool. So taking the total dollars in the cost pool by the total of the driver. Okay, similar to what we've seen before to get the predetermined rates. And then we'll assign overhead cost to products using the overhead rates determined for each cost pool and each product's use of the cost driver. So again, similar to what we've seen before, we're going to calculate a rate and then apply that rate at that driver. The difference is we're just breaking the overhead into multiple cost pools with different activity drivers. Two-stage process. overhead costs are assigned to activity cost pools, and then we're allocating overhead assigned to the activity cost pools to products using cost drivers, and that's steps 2 through 4. The more complex a product's manufacturing operation, the more activities and cost drivers are likely to have. So we're going to see some with 3, 4, but there could be manufacturing companies that have 10, 20, 30 cost drivers depending on how complex it is to manufacture a product. So we'll look at it in a graphic here. So we have our total overhead costs at the top. We're going to divide that into, in this case, 3 different activity cost pools. So raw material storage, machining, and factory supervising. Then we identify the cost drivers and estimate total usage. So raw material storage is going to be on amount of square footage. Machining is going to be allocated on number of machine hours, and factory supervising on the number of employees. Then we compute the activity-based overhead rate. So for the raw material storage, we have the cost per square foot. Machining is a cost per machine hour, and cost per employee for supervising. Then we can assign the overhead using those rates to the products based on those cost drivers. So whatever the driver is for each cost pool, we multiply it by what each product uses, and that's how we get the overhead assigned to the product. So true or false? A traditional costing system assigns overhead by means of multiple overhead rates. It's false. It has one facility-wide overhead rate. Direct material and direct labor costs are easier to trace to products than overhead. That is true. Regardless of which system you're using, process, job, order, or ABC, direct material and direct labor are still always easier to trace to the product than overhead. As manufacturing processes have become more automated, more companies have chosen to assign overhead on the basis of direct labor hours. It's false. It's actually just the opposite. As you have more automation, you have less direct labor, so you're moving away from using that as a cost driver. And 4, in activity-based costing, an activity is any event, action, transaction, or work sequence that incurs cost when producing goods or performing services. That is true. That's the idea behind it. So now we'll look at how we apply ABC to manufacturing. 4 steps again, we're going to identify and classify activities and allocate overhead to cost pools. We're going to identify the cost driver that has a strong correlation to the cost accumulated. We'll compute the activity-based overhead rate for each cost pool, and then assign overhead using that rate based on the product's use of each cost driver, and that's how we get overhead to the products. So for Atlas, we're going to look at 4 cost pools: manufacturing, machine setups, purchase ordering, and factory maintenance. So we have estimated overhead for each of those buckets, which total $900,000 of factory overhead. Now we'll look at cost drivers. So cost drivers must accurately measure the actual consumption of the activity. The following illustrates the cost drivers that Atlas identifies in their total estimated use per activity cost pool. So again, the same 4 activity cost pools: manufacturing, machine setups, purchase ordering, and factory maintenance. Each has a different cost driver. So for manufacturing, it's machine hours, and we estimate that there's going to be 50,000 machine hours for the year or whatever period we're dealing with here. Machine setups is going to have number of setups, and we're estimating 2,000 setups. Purchase ordering It's the number of purchase orders. We're estimating 2,500 purchase orders. And factory maintenance is based on square footage, and we have 25,000 square feet in our factory. So then we get rates for each cost driver. So it's the estimated overhead per activity, and then the estimated use of the cost drivers per activity. So again, we had manufacturing at 700,000 estimated overhead. We're estimating 50,000 machine hours, so it's $14 per machine hour, the 700,000 divided by 50,000. Machine setups, $100,000, 2,000 setups, so $50 per setup. Purchase ordering, $50,000, 2,500 purchase orders, so $20 per order. And finally, factory maintenance, $50,000 at 25,000 square feet is $2 per square foot. So we've taken those total 900,000 and gotten rates for our 4 different cost pools. Now we'll look at allocating the overhead cost to the product. Company must know the use of the cost driver for each product. So if Atlas produces 25,000 benches and 5,000 coasters, because of its low volume and higher number of components, app coaster requires more setups and purchase orders than the app bench. So again, we look at the 4 pools, what our cost drivers are, what the total estimated use is, and we split that between our different products. In this case, we just have 2 products. So the bench has 30,000 machine hours, the coaster has 20,000. That gets us our 50,000 total. Machine setups, 500 for the app bench, 1,500 for app coaster. Purchase ordering, 750 for the bench, 1,750 for the coaster. And then factory maintenance by square footage. The bench takes up 10,000 square feet, coaster is 15,000 square feet. Now we can allocate the overhead costs simply by multiplying the rate times the use of the cost driver. So on the left we have the bench, 30,000 hours for manufacturing at $14 is 420,000. 500 machine setups, $50 is 25,000. 750 purchase orders at $20 each is 15,000. And then the maintenance, 10,000 square feet at $2 per square foot is 20,000. So $480,000 of costs assigned to the bench. We're producing 25,000 units, so it's $19.20 is our overhead cost per unit. We do the same thing for the coaster, multiply those same rates by the use of the cost driver for that product. So again, we see machine setups and purchase ordering significantly higher for the coaster versus the bench, but we use the same rate just by that number. We get $420,000 cost assigned overhead cost for the coaster. Since we only make 5,000 units of the coaster, we have a much higher overhead cost per unit, so $84 in this case. Now we'll compare the traditional costing method to the ABC costing and see those differences. So on the left is the app bench. So direct materials and direct labor are the same. We haven't changed that under ABC. We're just changing how overhead is allocated. So traditional costing, we had $30. So it was $82 total cost per unit for the bench. Under ABC, we only have $19.20 per unit. So it lowers our overall total cost per unit to $71.20. So under traditional, we are overstated by $10.80 compared to the ABC method. If we look over at the coaster, traditional costing was $72 per unit. With ABC at $84 per unit overhead, we have $126 per unit under ABC costing. So that was understated under the traditional method by $54 per unit. What happens if we are using these traditional versus ABC? So we're probably overpricing the ab bench. So we think we need to cover $82 of cost. So instead of using ABC, if we used ABC, it's only $71.20, so we can price it lower and get the same margin. So we could possibly be losing market share to competitors. And the other side, the ab coaster, if we think we only have to cover $72 of cost, we're probably underpricing the ab coaster. So we're giving up profitability. We could be more profitable if we price that correctly. So that's a key thing that we use ABC for, is to get our pricing right, because we're getting more accurate in our costing, as well as being able to understand what is driving our costs at a more granular level as well. So we'll go through another example. KC Company has 5 activity cost pools and 2 products. Estimates production of 200,000 units of its automobile scissors jack, 80,000 units of its truck hydraulic jack. Having identified its activity cost pools and the cost drivers for each cost pool, KC accumulated the following data relative to those activity cost pools and cost drivers. So our cost pools are ordering and receiving, machine setup, machining, assembly, and inspecting and testing. We have cost drivers for each of those, and we're taking our $5,300,000 of total overhead and breaking it into these activity cost pools. We then have the use of the cost drivers in total. So 2,500 orders, 1,200 setups, 800,000 machine hours, 3 million parts, 35,000 tests. And then we break that into our different products, in this case just the 2 products. So the orders are split: 1,000 for the scissor jack, 1,500 for hydraulic jacks, and so on for the 5 activity cost pools. So now we're going to take that data, we'll prepare a schedule showing the computations of the activity-based overhead rates per cost driver, prepare a schedule assigning each activity's overhead cost to the 2 products, compute the overhead cost per unit, and then comment on the comparative overhead unit cost. So using this data, prepare a schedule showing the computations of the activity-based overhead rates per cost driver. So we'll take for each cost pool the estimated overhead divided by the estimated use of the cost driver. So for example, ordering and receiving, 200,000 divided by 2,500 orders, we get $80 per order. Machine setup, we get $500 per setup. Machining, we get $2.50 per machine hour. Assembly is 60 cents per part. And inspecting and testing is $20 per test. Now we'll take those rates and apply it to each product's activity. So the $80 per order to scissors jacks and hydraulics jacks based on their use of that 2,500 purchase orders. And that's what this looks like. We have the scissors jack on the left here. So the use of the cost driver that we saw on the previous slide, the rates we just calculated, and we get costs assigned. So scissors jacks gets $2,560,000 of overhead assigned. Hydraulic jacks gets $2,740,000 assigned. So now that we have the total costs for each um, product based on estimated usage, we can calculate the unit cost of the overhead. We do that by taking the total cost assigned that we just calculated divided by the number of units produced, and we get an overhead cost per unit. So $12.80 for the scissors jack, $34.25 for the hydraulic jack. And finally, we comment on the comparative overhead cost per unit. Total overhead assigned to 80,000 hydraulic jacks exceeds the overhead assigned to 200,000 scissors jacks because the rate per unit is much higher. We have in line roughly the same amount, so 2560 for scissors jack, 2740 for hydraulic jack, so a little bit higher, $200,000 higher almost. But since there's a lot fewer units, the cost per unit is much higher. Now we'll explain the benefits and limitations of ABC. 3 primary benefits: more cost pools, therefore more accurate product costing. We have enhanced control over overhead costs, and it supports better management decisions. So let's look at these in more detail. So with multiple cost pools, it's used instead of one plant-wide pool and a single cost driver. Numerous activity cost pools with more relevant cost drivers. The costs are allocated on basis of cost drivers used to produce each product. So it's more relevant to get the certain cost, and as certain activities cost more than others, we're driving those costs to the product that uses up that activity. We have a more detailed view of manufacturing activities. So the more cost pools, the different drivers, activity-based rates. So we'll have multiple rates and can assign those to what is actually driving the costs. We have different levels of activity. So we have a unit level, which is performed for each unit of production, so assembling cell phones. A batch level is performed every time a company produces another batch of a product. A product level is performed every time a company produces a new type of product. So time spent testing a new drug by a pharmaceutical company, for example. And then finally, facility level is required to support or sustain an entire production process. So it's not to a particular unit or to a particular product, it's for the whole factory. So again, the unit level activities could be machine related or labor related. So we could use machine hours or direct labor hours or cost. For batch level activities, we're looking at equipment setups, purchase ordering, inspection, materials handling. Product level is more overall for the product, so product design, engineering changes. And then finally, factory level activities, factory management salaries, depreciation, property taxes, utilities. Again, it's harder to break it down to a lower level besides facility, so that would be into the facility level. Then we can look at value-added and non-value-added activities. So value-added activities are those activities that increase the perceived value of a product or service to customers. So in a manufacturing company, you have engineering, design, machining, assembly, supervision, painting. Service company, performing a surgery, legal research, delivering packages. We'll compare that to non-value-added activities. So it's non-essential activities that add cost to or increase the time spent on products or services without increasing its perceived value. So under manufacturing, it's storage of inventory, moving inventory, inspections, fixing defective goods. So those are all really non-value added. Service company, We'll think about taking appointments, the reception, bookkeeping and billing, traveling, ordering supplies, advertising. Doesn't really add to the value or the perceived value of the output, but it is adding cost to the business. Activity-based management is a management tool that focuses on reducing costs and improving processes and decision making. We use ABC versus ABM, or via ABM, not versus. So for both strategic and operational decisions or perspectives, help managers evaluate employees, departments, and business units, and to establish performance standards as well as benchmark against other companies. Limitations in knowing when to use ABC. So some of the limitations are it's more expensive to use, and it's more complex than traditional systems. So as we have more cost pools and more cost drivers, having to track those and make sure we have the right allocations, but we also end up with arbitrary allocations, just like we do with traditional systems. So that's another limitation of ABC. It's hard to get around that totally, but ABC gets us closer to or having less arbitrary allocations, even though some still remain. When should we use ABC? When product lines differ in volume and manufacturing complexity, when the product lines are numerous and diverse, when the overhead costs can make up a significant portion of total cost, manufacturing process or the number of products has changed significantly, and production or marketing managers are ignoring data. So those are all reasons of when you would use ABC. So let's look at some activity levels. So Morgan Toy Company manufactures 6 primary product lines in its Morganville plant. As a result of an activity analysis, the accounting department has identified 8 activity cost pools. Each of the toy products is produced in large batches with the whole plant devoted to one product at a time. Classify each of the following activities as either unit level, batch level, product level, or facility level. So engineering design, that would be a product level. Machine setup, that's a batch level. So each time you set it up, you're going to make a batch of products. Toy design will be the product level because you're designing a toy for a particular product. Interviews of prospective plant managers, it's facility level. Inspections after each setup, it'd be batch level. So if we're doing the inspections after each setup, we're going to follow the machine setup. It's going to be the same level. Polishing parts is a unit level. Assembling parts is a unit level. And finally, health and safety, and that's facility level. Now we'll look at applying activity-based costing to service industries. Overall objective is to identify key activities that generate costs, keep track of how many of those activities are completed for each service performed. General approach is the same as manufacturing, and we're going to identify activities, cost pools, and cost drivers. We'll label activities as value added or non-value added. Sometimes a larger portion of overhead costs are company-wide costs that cannot be directly traced to specific services provided by the company. So we'll look at a public accounting firm, check and double check. We have the following condensed annual budget. $4 million of revenue, $1,200,000 of direct labor, $600,000 of overhead, so $1.8 million of direct or of costs, and $2,200,000 of operating income. Using a traditional system, we'll say that the overhead rate is based on labor cost. So we take total overhead 600,000 divided by direct labor cost 1,200,000. So 50% is our rate. Now if we apply that to a particular job, so we have $140,000 of actual direct professional labor during the audit of Plano Molding Company. It was billed an audit fee of $260,000. Using the 50% rate for traditional costing, we would apply $70,000 of overhead, so 50% of the direct labor cost. So we would have $210,000 of cost, $50,000 of operating income. Now we'll look at taking the $600,000 of overhead using ABC. So we have three cost pools: administration, customer development, and recruiting and training. Under administration, we're going to look at the number of partner hours. We estimate $335,000. 3,350 partner hours are going to be used, so $100 per partner hour is the rate. Customer development, we look at the revenue billed, so $160,000 of overhead costs at our annual revenue, $4 million, so 4 cents per each dollar of revenue. Recruiting and training, we have direct professional hours, so we think $105,000 related to recruiting and training. We're going to have 30,000 hours, so $3.50 per professional hour. So we've taken our $600,000 of estimated overhead, broken it into 3 buckets, and gotten rates for each of those. So if we look at the Plano audit, administration, we had 335 partner hours at $100 per rate, so $33,500 cost assigned. We billed $260,000 at 4 cents per dollar billed. We have $10,400 for customer development and $3,800 of direct professional hours on the job at $3.50 per hour. So for recruiting and training, $13,300 of overhead there. So $57,200 of overhead. And if we compare the two, under the traditional costing, we would have applied $210,000 of cost, $70,000 of overhead. So we would have had operating income of $50,000. Under ABC, we're only applying $57,200 of overhead, so a lot less than the $70,000. So $197,200 of total cost. So our operating profit on this job under ABC is $62,800. So again, having that more finite application of costs, we come up with a different operating income, and we could make better decisions on pricing and where to spend time or how to cut costs using the ABC versus just a flat predetermined overhead rate. So we'll go through another example. We carry it as a trucking company, provides local short haul and long haul services. Company has developed the following 3 cost pools. We have loading and unloading. We're going to look at the number of pieces, $70,000 of estimated overhead, estimate 100,000 pieces. Travel, we're going to look at miles driven. We estimate $250,000 of overhead. We're going to drive 500,000 miles. And then logistics, number of hours. We're going to apply $60,000 to logistics and estimate 2,000 hours. So using this data, we can compute the activity-based overhead rates for each pool. So loading and unloading, 70 cents per piece. Travel, is 50 cents per mile. In logistics is $30 per hour. Simply taking the cost assigned divided by the estimated use of the cost drivers. Now we'll apply those rates to a job A1027. Has 150 pieces, requires 200 miles of driving, and 0.75 hours of logistics. So if we take the rates we just calculated in the previous slide, using these cost drivers, we get $227.50 of the overhead to be allocated. So 150 pieces at 70 cents per piece, 200 miles of driving at 50 cents per mile, and 0.75 hours at $30 per hour. And that's how we get the $227.50. So that's how you use the same methodology to apply overhead using ABC to a service company. And that's it for Chapter 4. If you have questions, please reach out. Thank you.